Hello guys, what is happening? Good afternoon and welcome to this live stream. I don't know what time it is where you are, but it's 1 p.m. here. Not our usual time for a live stream, but certainly we got to pick up some friends from the airport tonight that are coming in from England. First time visiting Canada, so that'll be awesome. Having them over for a couple of weeks and everything like that. So the live streams, they'll still be around. I just don't know what time, but just look out for them. Make sure you hit the set reminder button when you see one, and that way YouTube will notify you when it actually goes live. So please hit that like button. It really helps get the stream out to people. Today we're talking about how the economy is imploding. It's imploding in Canada. It's imploding in the United States too. It's imploding globally. The fall of Europe is in full swing right now. But you know, one thing before we get started, and there's a lot of stuff that I want to go through today, particularly around what happened in 2007, 2008. Because as we know, patterns repeat, and we're seeing an exact pattern repeat when it comes to the tightening of the two central banks that are happening in lockstep, the Fed and the Bank of Canada. So it's going to be really interesting to go through that, and we'll use that Phoenix, Arizona real estate blog again to kind of help guide us. So one thing that I want to say, we've had some insane moves in currency markets this week. And, you know, I think the loonie has recovered most of its losses, but it's the sheer size of some of these tradings, some of these trades that happened were just absolutely insane. I mean, the loonie was down against the US dollar 1.8% the day after the Bank of Canada came out with their 100 basis point rate hike, 1% rate hike. Now, I'm not going to dwell too much on that because I feel like a million people are just rushed in like a swarm of banshees to cover that. And it's kind of been exhausted. You know, as I've said before, inflation was going to destroy the economy. And I said this before the Bank of Canada even started their tightening process, before the Fed even started tightening. I said inflation was going to destroy the economy. And if they come in with their interest rate hikes, which we knew was going to happen, all that is going to do is accelerate that process. And that's what we're really going to see, is the acceleration of that process, the acceleration of the implosion of this economy. And I think the fact that we saw such weakness in the loonie a day after that rate hike just tells you that people are selling out of the Canadian dollar. Big money was moving that day, the following day, to that rate hike. So there was more people selling the Canadian dollar, a significant amount of people. I mean, it was the weakest currency on that day. It was trading like a third world currency. And you know, we have to outline events like that because they are significant. They are really significant. When you see things happening out of line like that, it's very significant to watch. So it's interesting nevertheless. So anyway, hello from Dublin. Oh yeah, it's so it's about right that time there, probably 6, something like that, 7 p.m. I'm thinking around in Dublin right now. Hello to you. All right, so let's go into this. TD and Royal Bank, Canada's about to implode. So this guy read it on Seeking Alpha, which is a US financial media company. Canadian banks are like ships sailing on a sea of debt. Everything looks fine right now, but even the Titanic can sink. It's funny that they use that because I've used that before. I've said like it's like a ship, the real estate market, and I've said about the Titanic. I even was going to put that in one of the thumbnails once. But yeah, it's a good point to make that they're sailing on a sea of debt, which they most certainly are sailing on a sea of debt. And this article, the reason why I'm going through it is because it kind of shows you how this is even moving into the American media now, what's going on in Canada. And this really kind of shows it from an American's perspective, which I think is important because America is a large amount of investment that comes to Canada. And if they're seeing a significant downturn ahead, People are going to be reluctant to invest, which we're going to see anyways. So they're really talking about the stock, but they go on and say about the housing bubble. Canadians have been bidding up the prices of homes over the past few years, literally. Over the past year, many new listings, especially within urban centers, received multiple offers above the listing price. We know all about this, just ridiculous mania that happened last year. So we don't even need to talk about that too much. Bidding wars literally broke out. The economies of British Columbia and Ontario have been especially hot. Vancouver, British Columbia's largest city, is the apex of the bubble. Vancouver is the third least affordable city in the world. The average home in Vancouver costs 13.3 times household income, and the average price of a detached single-family home is 1.87 million Canadian dollars. Yes, nearly $2 million. So yeah, that's absolutely insane. Iqbal, thank you so much. $10. I appreciate that so much. Thank you for that super chat. Let me know if you have a question that you want to ask or anything like that. But thank you so much for supporting the channel. Really, really appreciate it. Thank you so much. And hello, Trader and Trent as well. I see you're in here as well. Nice to see you guys. All right, so it is literally insane when you think about that. $2 million. I mean, come on. And people never thought that was an issue. Sailing on a sea of debt. If you own a stock in a bank, this is not the kind of headline you're hoping to see. And then it puts a headline from our friends over at Better Dwelling. Canadian household debt to income ties record bigger economic drag this time. And it's gonna, because if people are up to their eyeballs in debt, then guess what? They aren't going to be able to go out and spend into the economy on goods and services. Now, what has happened is, because of the housing bubble, that has meant that people have been able to borrow from their home equity, refinance, and live the life of luxury, spending money into the economy like crazy, buying investment properties, renovating, all these different things. And I did a whiteboard video. I haven't done a whiteboard video in a long time about the bubble economy, and it's really simplistic. It's not like George's whiteboard videos. You guys, if you follow George Gammon, I highly recommend you follow him. You'll laugh at my whiteboard videos. But I'm just trying to really simplify things. I'm not as smart as George is, and quite frankly, I think he is the master of telling things in the macro world a really good understanding for everybody, I think. But yeah, in this whiteboard video, which I'll have out at some point, I got to edit it, I say about all these businesses that are based around the bubble economy, how that works when prices are going up, and how that effectively does the opposite when prices are going down. So you have literally the reverse effect. So if the economy is booming when prices are going up because all this equity is being sucked out of homes, etc., then what's going to happen on the way down when prices are going down? The exact opposite. All these people with renovation businesses. I've said this before on live stream. If you're in the US, if you're in Canada, just go on Google Maps, put in home renovation and see how many home renovation businesses you've got within like 10 miles of your house. You'll be absolutely shocked. Well, who's going to be renovating their home when, prices are going down and people don't feel like investing in their home anymore? And really, it's all about that psychological impact of things, People just really, really struggle to get around that. And, it's like me and Scott talked about on the other live stream the other day. We said how when things are literally going bad, it is literally like people then want to hop on the ship. They then want to say, oh yeah, we want to sell now. We want to sell now. And I told you guys, I said that would happen. I literally said that, but you guys know this. You guys that have been on the channel for a long time, I said this. I said literally the psychology. I can even dig up the video and I'll pin one of the videos where I did it with those circles. And I literally explained how that works, how the psychology technology is, when markets are going up, everything's fine. We're making money. And not a lot of people want to sell. And that's why inventory gets really, really tight. That's why stock prices go up, because people aren't selling. It's the same thing. The inventory of the amount of stocks for sale is less. So that means it takes less buyers to send the price sky high. Well, the same thing happens with homes. You see it happening in lockstep. The housing market and the stock market just soaring. But guess what? When they're coming back down, as soon as they start to come back down, everybody just piles in. They say, all right, now we want to sell, now we want to sell. And they're all chasing the market down because their mentality of price anchoring is on that before price. And now the market is moving down and they're trying to chase a falling knife. And I see that because I can only monitor so many markets. I only really monitor the market here in Calgary. And I think we're going to do a specific live stream about that because there's a lot of nuance there that I want to dig into. And there's a lot of just stupidity out there of people trying to pump this place. And I just think it's so dumb. You're going to see the same crash here as you are everyone else. And there's been a ton of FOMO and speculation here as well, which has been done on even worse credit than in other places in Canada. But regardless, I see it happening right now. I get all the listings. You know, guys, you can call up a realtor, get them to set up a search for you, and you'll get notified of the listings in different areas. That's what I've done. I've got loads of searches for all different types of homes going out. All I see is most people coming on way too high in the price, and then they're reducing. But guess what? If they listed at that reduced price, they probably would have got it. But by the time they come down on price, they've missed it. It's already gone down even more now. So they are just literally trying to catch that falling knife. And that is literally what you're going to see across this country. And the country is so reliant on the housing market for all these different types of business. I mean, concrete businesses, all these architects, bankers, mortgage brokers, realtors, construction people, framers, drywall people, electricians, plumbers, you name it. How many people work in this bubble and do not realize they're in this bubble? Well, they're going to realize it because they're going to get fired. And that's the reality, guys. I'm not saying that as some guy who's sat on top of his high horse going, oh yeah, I hope you get fired. Like, I don't want to see anybody getting fired. I don't want to see people getting kicked out of their homes or anything like that. But this is the reality. This is going to happen. It's not something I want to see. Like, I don't wish for this when I go to sleep at night. You know, I actually care for people. And that is one thing that people, you know, I think people don't even know about me, is I actually wouldn't hurt a fly. Like, I'm a person who really cares about people. And that's what really angers me about all these real estate agents and stuff, because I can see right through their garbage. And I know that they don't give a flying damn about anybody. And they'll just sell any story to propagate the fact that they want to sell houses and that's their business and they need to earn income and everything like that. But they're a moral hazard in that situation. Sorry for going off on that long rant there. I totally lost it there, but you know, it is what it is. Okay, so debt has been growing faster than income in Canada for quite some time. Recently, household debt to disposable income hit a record high of 180%. It's just insane. For a country to get this indebted, there usually needs to be some unwise lending by the banks. Booyah. You got it right there. They literally, and remember, this isn't Canadian media. This is from an American's perspective in this case. So I find that really interesting that they've put that in there, because you wouldn't see that in Canadian financial media. They've literally, you know, and that's why I brought this article up, because it was literally a pretty good article where they outline different things. They bring up charts. They make a good case for why you shouldn't invest in bank stocks in Canada. They even give an example of what happened to Citigroup. But that, you know, it just goes to show it does not take somebody who's that smart to figure it out. You don't really have to be a mathematician to figure this out. You don't have to be a macro economist. You don't have to be somebody who has a master's degree or even a bachelor's degree. I think a child could work out that if housing prices are going up, if you just said to a child, so housing prices are going up this way and incomes are going up this way, so it looks like this, will that sustain itself? And they're probably going to say no, it won't, because you don't have to be very smart to work that out. But apparently you do, because everybody in the real estate industry seems to think that this is just a gully, like they said in The Big Short, and it'll be over in no time and we'll be back to all-time highs. Those people are clueless, and unfortunately for them, it's their loss at the end of the day, because them not preparing for that eventuality, most of them are going to lose their jobs anyway. So it is what it is. So Canadians are often on a 5-year fixed rate mortgage and will soon be forced to refinance at higher rates. When this happens, the debt squeeze will be severe. Notice that Canadian consumers are now significantly in worse shape than American consumers, even if you compare it to the global financial crisis of 2008. You look at that chart. Just look at that chart. It's from Wall Street. We've gone through articles from Wall Street on here before, and you can just see how absolutely monstrous the debt bubble is in Canada. And I do think that means that the interest rates are really going to speed up the time frame, and we're going to go through the time frame of when interest rates went up in the US, when unemployment started to rise in the US, and when home prices started to go down in the US, to give you an idea of how the time frames all work together. But I do think, because this is much bigger, as this article shows here on this chart, you're going to see the fact is, it peaked out at 140 in the US there in 2007, and it's nearly at 180 in Canada. So just bananas, isn't it? And then down here, bankruptcy risk. Could Canada's biggest banks go bust? Likely not without bailout attempts from the Bank of Canada. The latest round of bankruptcies in Canada's banking industry occurred in the late 80s and early 90s. What was that after? A housing bust, a debt bubble burst, and it was nowhere near the size of this one. This one has been 30 years in the making. Government bailouts failed in 1985, but had the banks been the size of TD and Royal Bank, the government probably would have injected a second round of capital. TD and Royal Bank are trading at a large premium to book value. This leaves no margin of safety should a recession losses hit home. Just look at what happened to Bank of America and Citigroup and then it shows the price to book ratios in 2009. So basically you can see, that chart's not very good, but this one, there was another one somewhere here. Oh yeah, so this shows you what happened to Citigroup stock in 2008. So, and as you guys know, I've been shorting the banks. I'm not shorting them right now, though. I got out of that position. It's all on Twitter at MarketManiaCA if you want to see all about that. I've been shorting them at multiple times. I don't generally hold positions for a long period of time. I do lock in profits, but I'm not sure if now is a good time to short because of everything that is happening, and it's summertime. It's not generally a high volume time. So anyways, let's get out of this and let's go into the unemployment rate in 2008. I used to have a feature where I could just switch tabs real quick, and now it takes me a long time. So this is the unemployment rate, and basically you can see here I've got it going from 2004 to 2011, so you can see how it went up. So you can basically see the bottom of that unemployment rate, and I'm just going to write this down because I can't be bothered to keep bringing up the charts here, the good old pen and paper. So it's December 2007 was the bottom. You're pretty much flat, but it really started spiking up in April 2008. That's when unemployment started spiking up. Okay, so I'm just writing that down. I'm going fast as I can. Okay, so now we know when that happened, the time frame of that happened. Let's have a look at the Fed funds rate. So let's get rid of this. Let's bring in the Fed funds rate. Here we go. We got ourselves into a pickle, yeah. Too right, Trent. We did. Well, we didn't. They did. Not us. Okay, so as you can see, this is the Fed funds rate. All right, so in December 2007 was really when unemployment started to rise. So that was, guess what? It was when the Fed funds had been around, like they'd gone through their hiking cycle. So they hiked from June 2004, June 04 to when here? Or July 06. Okay, so they were hiking through that, and then they stopped, and then July 2007 was when they reduced. July 2007 was when they started reducing rates. Okay, so now we know that. We can go over to our good old friends at the Arizona Real Estate blog or whatever it is. Fantastic. I love the guy's interactive chart. And I think he's done this himself, so kudos to that guy. He's done a great job. We've seen this chart, quite so many times on this channel, as you guys know. I think it's he's got some great charts. So this is inflation adjusted medium home prices, okay? So July 2005, that was really when prices peaked out, and it was kind of flat pretty much until July 2000, June 2000, July 2006, which was when the Fed finished hiking. So they just finished off their hiking cycle, and then prices started to kind of level off. It had an effect basically on the economy, what they were doing, because the prices actually started to cool off. They started to actually go down. The unemployment started spiking in December 2007. So December 2007, look where that is. So if you look at the medium home price, it went from 209, well, what was the top? 220 to 184, sorry. So it went down quite a substantial amount. But this was when the unemployment rate started to spike. And essentially, after that, look what happened to the prices. They just absolutely collapsed. So it took about a year. It took about 1 year for the rate hikes to have an effect into the point of collapsing the economy. Now, figure this, because the economy in Canada right now is way more reliant on real estate than the US economy was in that time. So you are talking about a larger amount of unemployment. Not only that, we are seeing massive disruptions in the Chinese economy and in the Chinese housing market. I mean, you've got legitimate banks going bust in China right now. You've got loads of people not paying their mortgage on these new homes they bought because construction companies are going bankrupt. It is an outright mess in China. Now, one thing that people don't realize is a lot of the people who came in and purchased homes when it hit the bottom were Chinese investors. Yes, they were. They were Chinese investors because China wasn't really in a massive recession. And actually, that was the start of the Chinese boom that happened in the Chinese boom in 2007, 2008. So Chinese people, that was the start of their boom. So think about that now. Think about the Chinese economy, the US economy, both in recession. Think about what that is going to do to investor demand for housing. It's going to absolutely tank it. Team that with the Airbnb situation that we've got going on, which a realtor, and I'll read you this real quick, because this realtor from Florida who has actually agreed to come on the channel. I might get him on here with like a panel discussion with Scott Walters. So let me know if you want to see that. But this realtor in Central Florida, I'm just going to read out what he said because you'll find this quite profound. So I posted on one of the Reddit things that I'm on about the live stream that we did about the data behind the Airbnb thing. And basically, this is what a realtor said. I'm a realtor in Central Florida, and I've been saying this for a while now. I've seen this happen in real time. It's going to be the fault line that breaks in the market, 100%. And he's talking about Airbnbs, guys. Also, the loans these investments are purchased with are pure garbage. Non-owner, no income. It's the ninja loan of this time around. You can put a loan in the name of an LLC, which is like a corporation or a company. I'm guessing limited liability corporation. I'm guessing that stands for an entity that is literally meant to protect you from personal liability. It will be so easy to walk away from these loans. So it's funny he talks about that because there's a ton of companies that own houses here in Calgary, way more than I've seen in the rest of Canada, but they probably exist as well too, especially single family homes, these property management companies. So what's going to happen if they go under, again, is there no personal liability there? There's probably not. He put, it will be so easy to walk away from these loans. So many people bought second properties off refinances or HELOCs. And this guy is talking about Florida in the US. And I get a lot of people comment from the US. There's a lot of people that watch this channel from the US. And they say, it's not in a bubble. You're completely wrong. And you have a guy literally reporting on this. They won't be able to refi them at current rates or drop in valuations. They won't be able to short-term rent them. So they'll put them on the long-term market, which will crash out the prices and make buying even less attractive. Then they won't turn a profit and they'll be dumping them or walking away. Everybody is talking about being an Airbnb investor, totally like the flipper of the '08 crash. I think that guy absolutely nailed it with that description of what an Airbnb investor is. They are the flipper of 2022. They are the canary in the coal mine that people just haven't, they're the elephant in the room. People just do not realize. Nobody has reported on this Airbnb. I'm the first channel to report on this. It's just absolute insanity. We've gone through the data on this, but I totally agree. I think that guy has really got it right. The Airbnb will be the downfall this time. There is no supply shortage. The units exist. They are Airbnbs and have been this whole time. So there you go. You absolutely, that guy, if you're watching, you absolutely nailed it. Spot on. But there you go. He's seen this from a realtor's perspective in Florida, one of the places which has absolutely boomed for Airbnb investing. You are going to see a collapse beyond belief when it comes to this Airbnb thing. People are just going to be so emotional about it. As I've said before, they're not going to be able to let go of it. Think about how many people, young people, have got into Airbnb investing and they've started a business. It's been doing great, but they just can't see that the macro environment is totally reversing on them. And they're about to be holding the bag and a flaming piece of garbage at this point that they're not going to be able to sell in a down market, and then their income's going to drop. They're not going to have any people staying in these Airbnbs. And guess what? All these people who bought in 2021, they have no room to reduce the prices. They have no room to reduce the nightly prices because they bought so high. They bought the bubble. Everybody's just looking for an excuse to buy into the bubble. I don't care what it is. You hear the same excuses. Oh, I've heard the excuse. Oh, it's Calgary. So the prices are lower, so it's safe for me to buy. Okay, you're just coming here to satisfy your FOMO. That is absolutely fine. But just be aware that prices may go down 30%. And, you know, that is legitimate. The Calgary market is just in a smaller bubble, and you have small and big bubbles. I mean, I was looking at a place in Idaho near Sandpoint that had just in this ridiculous price growth from 2019 to 2022. Like, houses had gone from $350,000 to $1 million. Just think about how insane that is. $350,000 to $1 million. And this was like a town that had zero economy, where people were buying like second homes. And, you know, so many people have bought homes everywhere, you name it, Mexico, Canada, US. Like, this Airbnb bubble and fiasco is just way larger than people are anticipating. And that's what I'm trying to outline here. So, really, that was just it. I don't think there's many more things that I really wanted to go to go over here. But, you know, Airbnb has never seen a recession. It hasn't seen a recession. It saw a micro recession in 2020. And even in some markets in 2020, what did we see? Selling of Airbnbs. So, you know, what is a deep recession going to be like without gigantic government stimulus, especially if the central bank and government are preoccupied bailing out banks, legitimate banks, because of bad debt. And those banks are not going to want to lend. And you're already seeing the tides turn. The banks are now even starting to say, I saw this on TikTok, the thing's been deleted. I was going to show it on today's live stream, but it's been deleted now. It blew up for this girl in Ontario. It had, when I saw it, something like 500,000 views. So the thing had gone viral, and I think she took it down because she posted some follow-up things, and she was, I think, getting a lot of hate for it. But essentially, she got the rug pull from the bank, and she was really just screwed around by a broker. But the bank said, because your boyfriend got CERB, which is just like the stimulus money, which a lot of Canadians got, you cannot get an insured mortgage. Well, I don't remember ever hearing that in 2021. So is this a new thing that's just come into effect? Because this is what I'm talking about. They are starting to change. They're starting to change. Lending conditions are changing. The ground is shifting. People are not noticing that, but the banks are reporting earnings. I've seen the earnings come in. BlackRock missed earnings. Who else missed earnings? JP Morgan missed earnings, said that they're building up their reserves for bad loans. Why? Why are they building up their reserves for bad loans? One of the biggest banks in the world. Because there's been a ton of bad loans. And the synthetic CDOs that I talked about in that video, betting on all the corporate debt, well, there's going to be loads of corporations that go bankrupt. So all these things are going to blow up, and then the banks are going to be on the hook, and it's just going to be a total mess. The financial system, the circumstances are not exactly the same as 2008, as in it's different financial speculative products that are going to blow up the financial system this time. But it is very, very similar in terms of the psychological effects and patterns that we're seeing right now, especially when it comes to central banks doing exactly the same thing, but they're doing it even more at the wrong time than they were back then. Back then, they were raising rates when unemployment was going down. Unemployment is starting to rise now. It seems like it's turned that corner. Jobless claims rising in the US, and unemployment rising in not unemployment as the government defines it, but jobs are being lost a lot more than forecasted. So that's what's good to notice, because the unemployment rate is pretty bogus. As we know, you can go to Shadow Stats and look into that if you're more interested in that. But anyway, guys, I really hope this live stream was somewhat useful. It's packed full of a lot of stuff. And I know I went through a lot of stuff today. There's probably a lot of stuff that I missed. And I just want to close you out with what the Bank of Canada said here. We are increasing our policy interest rate quickly to prevent high inflation from becoming entrenched. If it does, it will be more painful for the economy and for Canadians to get inflation back down. He said, noting that the bank doesn't expect the official inflation rate to come down to 3% until next year, and won't get back to its 2% target until 2024. We're going to talk more about inflation on another video and what I think is kind of happening. And I'm going to be probably making a significant hedge against the fact that they might reduce rates as well, just to safeguard myself against that. So I'll talk about that in another video. But the chances of the Fed increasing by 100 basis points, that went up a couple of days before the Bank of Canada came out with their 100 basis point hike. So the Fed, it looks very likely that they're going to increase interest rates by 100 basis points as well. What's this going to do to the economy? It's just going to speed up the collapse, and they're going to overshoot. They've already overshot it by miles. They're going into no man's land now. But unemployment is a lagging indicator. That's what I would say with that. But maybe we've reached the bottom in that right now. We're starting to see jobless claims rise. We're starting to see the jobless claims rise both in Canada and the US. So that is something to note. So anyway, guys, I thank you so much for watching this live stream. Probably be back on Monday at 6 p.m. Mountain Daylight Time or 4 p.m. Eastern Daylight Time. So anyway, I will see you then. Have a great, splendid weekend, and I'll see you on the next one. Check out the video that's coming out on Sunday, guys, and let me know what you think in the comments below after I end this. So thank you so much for watching. I'll see you in the next one, guys.